Just starting there with my coverage, just one stock which has a bit of upside risk at this result. I think CML Group, code CGR, will report strongly. CGR has some earnings guidance in the market, looking for 18% EBITDA growth this year. My base case is that this is more likely to be maintained at this result, but I think the result itself can show that there's some upward pressure on that. The group reported 16% financing volume growth in the first quarter. I can't see why that wouldn't have continued into the second quarter, and I think this stock, the result can show that it's an upgrade candidate as we progress through the second half. Outside the result itself, I really like the growth profile of this business looking into FY19. I've got earnings jumping up 50%, which for any company sounds very optimistic, but at least half of that is coming from an expected refinancing event, improved cost of funds, which is expected in May, and around half of that is through organic growth. And the assumptions behind there are for around 8.5% financing volume growth. We're coming off a 16% year, so I don't think that's arduous, and potentially some upside over the next 12 months. The company is trading on 9.5 times. Can see it trading on 12.5 times, which gives us, sort of strong returns over the next year, 30% plus, hopefully. And as I have outlined in the catalyst, as an outside chance, there is one business in this industry touted for sale by the press recently. That's Thorn Group's trade and debtor finance. Not too many acquirers of this business, so expect CML can potentially have a look. Potentially is a decent fit, which might be a little bit of cream and a catalyst on top of the base case. Just secondly, looking at the risks in reporting season across my coverage, do see some short-term risk in Silver Chef. Really, this is around the arrears position in Go-Getter that has been talked about. We've talked about it since the last result. The chart there in the slide reflects the arrears position that the group had at that time. At the AGM, the Silver Chef management themselves highlighted that collecting on these arrears position was tracking behind their internal expectations. For me, it's not a material risk to the business as a whole, but it could be material to this year's earnings guidance that they have in the market. So obviously very cautious and wary of any market reaction if there was a potential impairment in those receivables taken at this result. Longer term, plenty of growth coming through over the longer term from Canada, but certainly not willing to step in front of a short-term risk that the market might be savage on. That was just reporting season as a catalyst. I just thought I'd touch on two stocks where we've seen a fair bit of share price action from the last week of trading. I did speak on Credit Corp post their result. I just thought I would highlight it again. I know debt collection's not an industry that everyone talks about first thing on a Monday morning, but I just thought I'd highlight the management track record here for Credit Corp. These guys over the last 7 years have delivered compound EPS growth of 16% per annum. Every one of those years has been double-digit earnings growth. It's all been organic growth, and they haven't raised any additional equity along the way. So they've got an impeccable track record. For me, that can continue. It's more about the rate of growth, but the business certainly has a lot of growth in it. The strategies and the products and growth strategies that they have in the business at the moment, looking at how they can mature over the longer term, you can see the earnings base for Credit Corp being 70% higher. Obviously, that's over a 5 to 6 year period, and it will fall in different percentages. But really, for me, the growth profile of this business is more about execution than opportunity. The stock did run away up to 17 odd times. It's come back to around 13.5 times on the market volatility. For me, that's a decent entry point into what is ultimately a really strong growth story in the small cap space. And just lastly, Smart Group. They provided guidance, a nice little upgrade at the end of last year, delivering around 30% EPS growth in their calendar year end, calendar year 17. I don't think, therefore, the result itself is a major catalyst, but the result should show that this company is still delivering solid organic growth metrics. That's package uptake, lease uptake, along with the acquisitions they've made. Look, acquisitions, when you go back and have a look at the company, they have really been a strong part of the outperformance for Smart Group over the last few years. Really, it does get tougher as the business is bigger, but the management and board strategy is to continue with acquisitions and consolidate the industry and even move into other ancillary businesses. So I think the acquisitions can continue to be the outperformance of this stock, the driver of the outperformance over and above the numbers we have in the market. So look, not screamingly cheap, but definitely come back to a multiple there around 16 times, closer to a market multiple and closer to its average, where I think we can start having a look at Smart Group again.